Hey Stefan, let's get straight to your analysis of AJ, and overall I can say it's pretty nice. I like it. And this time I will just point out to some most important parts that I want to comment from your analysis, and then I will just do my own analysis with commenting on the things I'm pointing attention to, and we will do this this goal on analysis this way, okay? And overall, I agree with what you mentioned about this analysis. And here are some things that you can instantly add when you are looking, for instance, on your monthly bullish range like this. You can add straight away that you have, for example, this logical deeper zone to mitigate, and that's all. So you can see, say we are in the middle of the range, and it seems that we have this deeper zone to mitigate in the future, possibly. So another interesting thing that I noticed through some of your analysis is that when you're trying to pick up deeper zones to enter, for instance, on daily, at some point of your AJ analysis, you said, okay, then if I will look for buys, I will look from this zone. But it's important to say that it's not just a random daily zone, because in any way we had this bullish shift and then a lot of shifts back and forth. So once we had a second shift on a daily to the bullish side, like here, we are starting to create lots of new structure. And I mean, from the standpoint of a daily chart, this zone is not non-existent at this point already. So when we will come here, we will be just in a bearish market from the standpoint of daily. But of course, we need to actually add that we are looking at that zone as a refinement of this bigger monthly zone. So for us, this is just a refinement, which is pretty good, by the way, because this is a place where actually this really important and big break of structure happened. So, and this zone in relation to our high time frame targets is pretty small. So if we imagine that you have a tap and then a confirmation, your stop loss will be relatively small, and you have all the space to move and have some good trade. But with that said, again, if you are picking like really distant zones for confirmations after the market did a lot of shifts to the other direction, make sure you check if this is a good refinement. And I would like to stop a bit more on this part, because I noticed several times from you. So again, what if you would like to do something like you did there, what you're doing is picking some zone which could be a refinement from a higher time frame, or which could not. So depends on how lucky you are. And then the market starts its bearish trend. And of course, after this shift, this zone is not relevant, and you are just looking basically to enter in the zone which is a target for the market, a target to do this. So you see, this is a really, by the way, common mistake that people make. They see, oh, we have an imbalance, and so we need to show a reaction from there. But actually, no, the structure prevails, and it could be a zone as a refinement. So now now I will do my analysis, and what I recommend doing is not actually dividing too much multi-time frame analysis and other parts like relation, and other parts like relation between multi-time frame structures and zones, quality, maybe price action against the main bias, and reaccumulation, redistribution. Because when you think about it all like simultaneously at the same time, then you can get a better story from your market. And I will start my analysis with 3 months, and again I will try to be as fast as possible, but still balance it out with details. So on 3 months, what we have here is a bearish market. First of all, of course, it's just moving bearish, And let's have a deeper look at how it moved. Of course, we can just say that it is just in this huge range, and that's all. So like 50-50 and move for lower time frames. But just for the sake of exercise, what we had here is this break, bearish again, mitigated something here, so created this usual pattern of redistribution here, and continued to possibly new lows, but it never happened. So what we had there is just this weak break to the downside. And by the way, you see, actually after redistribution happened and we mitigated some zone here, we created one more pullback and one more break. So actually a break after this one bullish shift, a break to the downside, new one happened, but it happened with a really low quality impulse, as you can see. So the impulse was pretty weak, and it didn't manage to do anything with this higher time frame impulse or with this previous two legs low. Yeah, so it didn't manage to close below it and just failed its zone. By the way, the zone itself was pretty nice. And then started some bullishness. Bullishness failed again with this big impulse, with this really clear zone, with a full body candle, like strong impulse, and the market mitigated its zone here. So if someone is trading 3 months chart, maybe based on overall bearishness, they could argue for entries from this zone with these protected highs and entry somewhere here on a classical confirmation we discussed before. And maybe, depending on your RR targets, maybe you can have something from this move. So what's more interesting? So what can we add more is that we are still inside this huge shift to the bearish side on 3 months, which is in confluence with overall bearish trend. And yeah, by the way, this is one thing that you can add to your analysis. Ask yourself not only where are you now, but also what was before. And when you ask this question, you can have more context from your analysis, because yes, this is bearish, but it's also important what happened before. Imagine that this bearish shift happened after exactly the same price action like here, but from the bullish side. So imagine that the actual price was looking like this. Sorry. So one more shift here, and this is first bearish shift, or maybe even all this range happened after a bullish shift. I mean, for me, then this move will not be so bearish. So this is my conclusion for the 3 months. And by the way, of course, I need to say that we have lots of inside structure here. So overall still bearish with lots of inside structure. Didn't manage to create any new low. I'm not saying I use this information about if the price managed to make a new low or didn't manage to do it, but it's just what it tells us is that when the price does not manage to create a new low after full mitigation, well, that means that we now will have a lot of inside structure. So of course, range market, and now we are starting to build bullish inside structure, but still overall bearish from 3 months. On monthly, we are having the same huge bearish range, and then just enormous amount of inside structure building for 10 years already. And so that's why if we know that we are trading daily, I will not actually stick to with too much attention for this bearish move. The only thing I would add is that actually, if you are so what can help additionally to have a better view is ask yourself, how would I trade this market if this was my only time frame? So if this was my only time frame for 3 months, I would wait for this. First of all, I see that this is a repeat mitigation of a zone. And that's, by the way, okay, because sometimes the market just needs to go several times to the zone, mitigate it, close the orders, because you can just go mitigate and close everything you want, do everything you want in the zone. The market can do this and then come back again, because the volumes are really big. And this is actually an entry. Even this level, it could be an entry for the monthly, like this. This could be an entry for the overall bearish target. The same thing we have on the monthly. We have a zone, a refinement, which was mitigated, and now the price came back and started a reaction. So this could be an entry like this from the monthly as well. But also what we can wait for from 3 months, of course, is a redistribution. So my main scenarios are this: first one this, and second one this. And then I can just decide. I will wait. I can just decide and see what happens. But this was more accurate information if you were trading these higher time frames. But we know that we want to have lower time frames entry, and that's why we need to pay attention to the fact that yes, we were moving bearish in the inside structure of that 3 months bearish impulse, and now it seems that the market started to create this bullish move like this, with a break of inside structure, mitigation of a deeper zone, leaving some parts unmitigated, so building the cluster overall, but not building the full cluster. And then creating one more break. And now the market is in the middle of a monthly inside structure, or it, of course, it's like a real structure on weekly, I think. And what we have here is a creation of new high, this low, and these zones that are still unmitigated, and it seems that the market can easily go and mitigate it before moving higher. And right now we are in the middle of this monthly bullish impulse. And so again, if I'm looking at the chart like this, if we are just putting away the time frame perspective, the pattern itself telling us that our main plan for this market is just this: wait for this zone for a tap and find our confirmation and entry. That's all. So we can't enter here because we are in the middle. The risk to reward for me will be too low. For some people, they are trading one-on-one, one-to-one, or 1-to-1.5, or 1-to-2, and for them this already can be an entry to the upside. Now let's look at the weekly and 2 weeks. So 2 weeks we have this bullish market, which, by the way, so what we have here is a market that didn't see any deep pullbacks yet, except of this one, so just based on inside structure. And yes, we have 3 shifts, so this is just a bullish market with this zone for deeper mitigation, so basically the same like on a monthly. But what can we add from here is that we had this shift of structure that came from here, and now we shifted once to the bearish side on 2 weeks. And let's check the weekly, and on weekly we shifted with more structural moves. So we had this one first, yeah, and this is second break to the downside. And now on the weekly we are in this bearish shift, bearish impulse with this zone. But of course it's really important not to forget what we have on monthly, what we have on 2 weeks, because what we had there are these big zones, and then maybe we can refine them. So everything here is mitigated. We have basically this as our last refinement, and these are 2 main zones I would like to look at. So if of course if we are looking for bearish entries, we can have something from here from daily perspective, and then something from there. This will be the priority for an entry, so from here, or with a new break of inside structure and entry from here to the bullish side, with alternative option of entry to the short side if we will have confirmation from here. And let's look on daily. So daily was moving bullish from here, showing some reaccumulation in this part, creating new bullish breaks, then more bullish breaks, and then starting this local downtrend with reaccumulation, inside structure building, really nice mitigation here, really great continuation, again mitigated these zones, and recently created a new low. A new low was created with the overall bearish context from daily. Of course, we remember what we have on weekly as bullishness as our priority. So what can I add to the daily analysis is that we have a really interesting comparison here. So if you compare how this part was created with a really clean shift of structure, a really clean zone mitigation, and creation of a new low, and now compare this part to this one. The break of structure actually happened here with this really small break and immediate snap back to the range itself. So you see this break was much more confident, and yes, technically we are bearish from this zone. So this is the root of the move, which was mitigated right away and created this shift of structure. Again, it's all wiki, it's all break, it is all broke up with inside structure. So I really don't like this bearish impulse, and even more it's relatively overextended. So based on this and overall bullish context, I would most likely not trade this one because the root of the move was mitigated. Yes, we have this bigger zone which could be refined to some unmitigated parts here or just simply like here, but again, I don't like what it did here, and so I would probably not be bearish from here. So what I want from this market is this: either mitigation lower, so either in this zone or maybe even lower, and then finding some bullishness, or shifting back bullish from here and creating some nice zones and then finding an entry. So if we are using daily chart as our main chart, this is what we have here. If we ask ourselves if we have some overextensions based on structure, then no, we don't have any. We have 3 shifts to the upside from high time frames. We have many shifts to the downside from daily, but they are changed with bullish reshift, so it's all okay. We are where we are in the working range. We are just in the middle. So if we were here, maybe we could have some aggressive shorts, you know, with some confirmation, but we are just in the middle, so we can buy, we can sell. So waiting is a good decision for this kind of price action. And for Euro CHF, I would do in the same manner. So first short comments on your analysis. And from your analysis, what I would like to point out is that you mentioned that this could be a sign of an early reversal. Well, yes, this could be, but like a really low percentage of this actually happening. Why? Because you mentioned that we have these 2 bullish shifts of structure on weekly, and yes, this is true, but that's why it's so important to not only point out what we have from structural perspective right now, but to look where did it all come from. And immediately we see that we are in this bearish move on 2 weeks, on monthly, and not only that, we also are mitigating, first of all, this root of the move on 2 weeks and this obvious bigger zone, maybe from 3 weeks or some other time frames. but it's just obvious on the chart that there was this up move before the down move, and we mitigated it, and we are starting to show a reaction. So at this specific point of time, saying that these two bullish shifts that came into higher time frame zone mitigated it and started a reaction, saying that this is a sign of a bullishness, well, for me it's like 90% that it's not. For me 90% is that we are moving for this as our target, especially if we put everything into perspective. Now another point why I don't think that this is worth considering as an early reversal is that if we see the quality of the moves and counter structures, and that's why, by the way, I mentioned that it's important to start thinking more at the same time about it all, because yes, these are shifts of structure, but look at this shift. It started from a weekly price action. The shift is like not really confident. This one is much better, of course, but this one is not that good. And again, it came into this zone and just snapped back, starting to build this inside structure already to the bearish side. Now it's just looking that it wants to fail here. So again, the quality of these zones are not that good. And by the way, pay attention how everything here is mitigated. So yeah. Then later in your analysis, you also mentioned this zone. First started to mention them, then I think you skipped them. But again, this is the same kind of mistake I described before, when you have some bullish shifts and you say, okay, maybe the price wants to do this, but actually these are the targets. So these lows are the targets now for this market. Yeah. By the way, maybe technically, so what we have here is bullish shift, 1, 2, then a third one. Now started this first. Yeah, and by the way, you see, even from this perspective, if we come and break this low, we will already have 2 bearish shifts on daily with an overall really bearish market. So these zones does not make any sense in this market at all, even as refinements from this higher time frame shifts. So this is not even as was in a previous pair. Now let me quickly do my take on this pair. So yes, monthly is just bearish. So this market is really bearish. What we can say from overextension, and by the way, when we are talking about overextension, we're not talking about the moves themselves and not about how big they are, but from a structural perspective, and just if we have like 5 or even more, like better 7 or 10 shifts to the one side, then we can start to expect some breaks to the downside for reaccumulations or redistributions. And this market is, I think, pretty overextending from the monthly. So the last time we had some bullish shifts was basically here, and then we had one bearish shift. Okay, so we had some bullishness. So this was 1, 2, 3, 4. Basically, so these weeks are just too ugly. There was something happening with banking system. I don't remember. 1, 3, 4, 5, 6. So we have 6 shifts on the monthly, and that's basically not telling us that it's like extremely overextended. It can easily go and liquidate all these lows. So it can do some redistributions, but it does not need to be. So that's why at this point, the market for me is just bearish from the monthly perspective. From the weekly perspective, I already told you what I think. It's just looking really bearish. It mitigated this bigger zone with this clean break to the downside, already created a redistribution, and our overall target is this. And by the way, if you are working from 3 weeks, so this is a 3 weeks time frame, and this is the root of the move on 3 weeks, which had real clean shift, unmitigated zone. Yes, and by the way, you see all the higher zones are mitigated, and the market even mitigated this, basically almost mitigated this refinement, this hidden zone, and now is starting to go down. So if I was trading this time frame, I would enter right away from here, maybe protect myself here, so if I want to. So bearish on weekly as well, and bearish on daily as well. So I'm really bearish on this market. And look at this bearishness. We have a sustained downtrend, which created some shifts to the upside, and now shifted back bearish again in confluence with all the time frames, mitigated this zone on daily. Now it's starting to move down. So at this specific point of time, we missed entries from here. So if you are someone who is trading 1-to-1, it's an okay point to enter. Put your stop loss here, your target here, and you are good to go. For me, of course, I'm trading higher RRs, and this was my entry. So when I'm looking at this market, I realized I missed my entry there. And yeah, basically I don't have space enough to move to these lows. Yes, I have my high time frame targets, but for me that's not enough. What I would do, my main plan in this market is this: either a shift to the bullish side with a shift to the bearish side, or just creation of a new range here and then enter. Basically that's it for Euro CHF.